Yo, what is up, guys? Camilo here. I hope you are well, and I hope you all had a fantastic Friday. So we saw all major indices move lower, still likely in that C wave of the overall corrective move that we are trying to track from the impulsive structure that started August 19th low. Okay, this sell-off was, it was real interesting because it all came out from Apple. Apple, as you know, is the single largest component in both the S&P and the Nasdaq, weighing over 6% on the S&P and over or just under 12% in the Nasdaq respectively. All right, and Apple closed today negative 0.34%. So it was a big sell-off today, and all because of that Epic Games versus Apple Computer case news that came out today and during the intraday session or the cast session. Now, where does that put us? And the question is now, actually, is this the beginning of a sell-off? Is this the top for the markets? Was this the catalyst that triggered the entire market? Now, the rally from the COVID lows, March 2020, to hit the top. Okay, and that's it. And the answer is unlikely. I mean, that's not too big of an event for it to cause the overall market to just not roll over and not correct the entire rally. But what it is happening, though, what it can happen is that we may see further downside just coming into next week. And let's review. But before we dive into the analysis, consider subscribing to the channel. Click that like button and hit that bell notification icon so you'll be notified when I upload these videos. Alternatively, join Trending Waves for free. The link to the Discord group will be posted in the comment section. Okay, I'm still doing this whole free open house event for the Discord group. Come on in, join the team. You'll see behind the doors how we trade and how we analyze the markets. And obviously, this is just for a period of time. Okay, so join the Discord group and you'll get more details once you join. All right, so we're still respecting the 50-day simple moving average. I'm gonna turn on the labels in just a second, but as you can see here, okay, if I zoom out for a second, okay, we broke below the 50-day simple moving average on November the 2nd of 2020, and ever since we have been holding it as support. Yes, we broke down a little bit right here on March the 3rd, but we ever since have been holding it as clear support. We back tested a couple of times, but we keep on holding it. Now, today's candle was pretty big. Okay, if we look at volume was above average. The MACD is trending lower now. Histogram is heading lower, and the RSI is also all pointing lower. So what does this mean? It means that we may continue seeing further downside. And where I anticipate that this may happen is probably a retest of the 50-day simple moving average. Okay, at this point, we may find buyers get interested and then take us on higher. So what does the wave count or what do the technicals look like for this zone? Let us turn on this our areas here. Now, what I'm looking here to do, guys, is the following. All right, so if we take a simple horizontal line, okay, and we try to match it, I know that the moving average, as days go by, it'll move up, it'll continue moving up and try to meet price. But for now, we're going to try to match it with a price history here. So we see that, oh, didn't do it right. We see that 441.80 was the previous high here, and is sort of matching up where the 50-day simple moving average will be, okay, or it's at right now. So currently, if as the days go by, the average continues on higher, while price action continues on lower. So this is a sort of an area to of interest for buyers to try to keep their eyes open and wait for. I mean, it does look like it's an interesting zone, given that there was a lot of resistance in that area, and previously it was acting as support here and then resistance, and then we broke above it. So maybe it's time to retest it and test the 50-day simple moving average, and then we head out. Now, what does that look like with our Elliott wave count? All right, so taking you down from the daily time frame to the 1 hour time frame, and let's follow where the line is now. So the line is here, okay, at the high of July the 29th. And well, while we were looking and tracking, let me actually turn this off for a second. Okay, so while we were tracking the possibility that we were going to bounce off these two fib levels, the 23.6 and the 38.2, 449 and 446, we ended up selling off further. Okay, we are looking at this as an A, B, and C wave. Okay, the C wave is still ongoing, but now that we broke below these two key levels, all right, the next logical target will be the gap fill here. Okay, we haven't filled this gap, and so it is likely that we may continue and try to fill it. Now, obviously, if that's the case, then the next levels will ideally be the 618 and the 786. Now, if we turn on these if we turn on our fib levels there, you're going to see something fascinating, right? That the 618 falls in line with, actually, that's too low. The 618 and the 50 fall in line within the gap here that needs to get filled, and the 618 is close to our support area. So I do have a strong argument to be made that this zone is potentially a good one for a buy opportunity. Okay, so we may see further sell-off coming into next week for the price, to get this gap filled, and then potentially test this previous high here at 441.80. All right, so these are three levels to keep our eyes open for. We got to watch 440.54, 442, and 441.80. All right, guys. And then, then we head on higher. All right, so I hope that's clear. I hope that was, that was helpful. Let's see what else. Down to a 30-minute time frame. Yeah, so C wave is still ongoing. This is C wave that I was telling you guys about earlier in the beginning of the video. We're still tracking it, so it's 1, 2, 3, 4, and then the final fifth wave. Obviously, this doesn't count anymore, so let's take a look at the 1618. Yeah, so the 1618 of that smaller degree is within the 50% retracement of the higher degree wave structure. All right, so that's ideally an area of support also. So keep these levels on watch. Jot them down in your notes, and we shall see what happens next week. So that's our plan. Over to the Qs. Not much to say in regards to this, because this is also the same, right, as what we're looking for in the NASDAQ, in the SPY. But let's sort of review again where these fib levels are going to be. So obviously the 23.6 and the 38.2 are obsolete at this point because we broke below it. So now we're going to move forward to the 50% and the 618. And damn, that's pretty low. Actually, let me see. 1 second here. Yeah, no, my apologies, guys. So our next level, I mean, we're still within that zone. So let's just keep it this way, right? Let's keep it this way. Let's keep it for argument's sake that the SPY is moving lower and the NASDAQ or the Qs will hover around this zone, which makes sense, right? Because we see that the 38.2% is within this price structure here that held support. So it's ideally that, price may continue to sell off ever so slightly and find support within this zone. Obviously, as I just mentioned, if we are to sell off further, then the 50% is our next level of support to keep on watch for. Okay, so this zone right here that I just highlighted is still at play. So from the August 19th low, we went up in one ABC correction into the wave 2, which we're still tracking. So keep your eyes out for 377 through 371 for potential buy opportunities. Over to the SMH. The SMH did pretty good today. As you can see here, the semis are in the green. It was the sector that was holding up. Obviously, I think Nvidia was in the green, but AMD sold off towards the end of the day. So what is likely happening here, we broke above the resistance zones that we keep on tracking, right? And so likely is that the wave 2 of C has completed, and this is ABC, and now we're in the makings of 1 down and 2, so ABC, and then we're heading on higher. So we have to keep our eyes open also for the 1272 external retracement level, because that could also mean that this is the wave B. So this would be A, 1, 2, 3B, and then we head on lower to the wave C. So keep your eyes open for the 276.95 and potentially this gap fill. So we must find support within this zone, all right, for us to consider. Actually this trade, I remember today we closed half a position of our SMH holdings on the contracts that were expiring next week, September the 17th. And so those came back to life after our analysis suggested that we were going to see further price action go up higher today. All right, guys. So again, if you want your Elliott wave analysis for individual charts, consider joining Trending Waves, totally free. The link to the Discord group is pinned in the comment section. over to the IWM is now within the zone of our support area that we're looking for. So now you start seeing a pattern here, right? You start seeing the SPY, the Qs, IWM, SMH, all within the same sort of percentage, right? The distance from its support area that we're tracking. So we want to see price action fall towards the 50%. It's obviously hovering between the 38 and the 50. Let's take a look and see how it's going to react. I mean, it is the previous wave 4, and that's also a good sign, because the previous wave 4 is normally a good level for support. So that's the 50% of the overall wave structure here. So A, B, and down in C. All right, guys. So no, I think this is still wave. Yeah, this still plays out like this until until proven otherwise. All right, guys, so that's it for me tonight. I hope that you all had a fantastic week, and please enjoy your weekend, and I shall see you guys bright and early on Monday. Thank you so much, and subscribe to the channel. Bye bye.